Hey everyone, and welcome to the PivotBoss Closing Report for March 14th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the recent session and the upcoming week. Here's the ES in a daily time frame. What we were looking for in the previous week was a pullback into the previous month's high price. For the forward March contract, we were looking at 1968s. Once we got to change over to the new June contract, we were looking for 59.5 as an area where bulls wanted to defend. First shot at seeing the squeeze into the primary bull target for the month, which is 2025, and a shot at continuing higher into the next HV and above at 2063s. And so far, we continue to see that push. Now, what we talked about this morning pre-market was that bulls wanted to defend prices back at 2000 and keep prices above that zone for a continuation higher. Any failure to hold above that area, so should price fall below that zone, we could see a failed range expansion, and that could lead to a pullback into the midpoint of the key range at 1941, followed by a fallback into the next HV below, that's 1912 half. So this is a very important zone here. Bulls want to defend a pullback for a continuation. Failure to hold 2000 could open up a move back into 1959 half, 41, and lower. Pullbacks right now have been defended, so even if price does pull back, it could be a buying opportunity for another continuation. But right now, 2000 is the early pivot to watch. And the intraday time frame, you can see here we have a key range here that's developed from 58 up to 2001, midpoint at 79.5. And right now prices are holding above the top of that key range, 2001 here, forming a range. Not really seeing a runaway push through that area, but it's a lot of good energy that's being built up in the zone. Failure to hold above 2001 will run that energy all the way back across the range into 79.5. and a shot at retesting those lows into 58. So it's important that pullbacks be defended by bulls for a shot higher, likely into the upside continuation targets into 2022 half and 2044. All right, taking a look at crude oil here. Here's crude oil. You see we've had a nice solid continuation ever since we rejected off those lows. At the time, we were looking for a rejection off the bottom of the range to lead to a move across the range and then to the top. And we've seen a continuation. We had a minor stall right here where we thought we could see a rotation back down to generate a little bit more interest for a squeeze, but it really didn't need that. It finally pushed through that 35.25, and we saw a nice continuation higher. Pullbacks have been defended. So right now the expectation is for bulls to continue to hold the line, either 37s or 36s for a shot at one final squeeze into 40 half. Primary upside target for the week is currently 40.03, and that could be a target to play to as well. Any failure to hold above 36s opens up a big return to 34.63 and a shot at retesting value at 33.44. Let's take a look here at crude in an intraday time frame. In this time frame, we saw price sell off significantly from the previous session's close, and price continued downward through 5-day VPOC. Our expectation pre-market was that we would continue downward into the bottom of value below 37, and from there you would look to see if there was any acceptance. Failed acceptance below 37s could return price back to value. We saw most of that play out today. We saw price pop downward. We saw it hold. Eventually it squeezed late. Didn't quite get all the way back to 5-day VPOC, but so far that's the early idea, is that if prices pull back into 36.89s, 36.84s, the expectation would be for bulls to defend for a return of 37.80 on the button there. Any push back into that zone could be defended for another round of weakness, but we'll see how this plays out around 37s. The major LVN is down toward 36, and the previous week's closed at 36.09. So, any push even into this zone should be watched for a potential return back to value. Let's take a look at gold. This morning, what we were looking for was, after we saw such a significant rejection of prices above 1272s yet again. This morning, we were talking about looking to defend a pullback into the pivot range and 1263.90 for a shot at seeing a continuation into 1233.30 and 1227.70, and we hit that target zone. So a solid return off that area. Price came right into that zone and sold off significantly by the end of the day, and then eventually bounced back up. All pullbacks have been buying opportunities, especially in the uptrending market. We've been following the fast pivot-based EMAs, and pullbacks in the trigger zone have been buys. If we look at a higher time frame pivot-based EMA now, you can see that we finally reached the 21 period average at 1233.60, and buys came in off of that zone. So this is the first time since we've squeezed significantly that we're coming back to retest this area right here on the larger PIMAs after this changeover occurred. And typically speaking, a buy into this area could spark the next bigger swing move up, but you have to continue to watch the midpoint of the key range. That's going to be the important area. That's the 1227.70s. Any failure to hold above that area opens up 1191 half. And that was our expectation here. If price can't hold above 1263.90, the expectation is a return to the midpoint and then a likely push across the range. And so far, we're almost halfway there with potential to see more weakness ahead. So right now, it's going to be important. If price drops into the zone, do the bulls continue to defend, or do the stops come out and a continuation ensue? We'll see how that plays out. So far, pullbacks in this uptrending market have been buying opportunities. So the early idea is to defend for a shot at squeezing unless 27.7s can't hold. Here's the NQ in a daily time frame. We were watching 43.55. 43.55 is the LVN, the key level right here. And price finally pushed above that level and just traded around it, holding above the pivot range here. And it's going to be important again. Any rejection above 43.55 could open up a return back toward recent key levels, 41 to 4200, 41.88 to 4200. That could be a zone to target there. Pullbacks right now into 4200, 42.20 or below could be seen as a buying opportunity for a return back up. So right now, given the uptrending market, pullbacks are still buying opportunities until proven otherwise. But this is going to be an important area right there. Bulls really need to get traction above 43.55. Otherwise, you could see a quick return back toward 42.20 at the very least. So if you look at this in an intraday time frame, you'll see it's been a steady squeeze up. The key level, the key range and key levels we're watching, 42.21. 42.79.75 and 43.38 half. That impulse range, very nice. Price right now holding above the top of this range, and you can see this is the 25% expansion pivot holding it so far. Right now, any pullback, at least into that 43.30 to 43.40 zone, could be a buying opportunity in overnight trading for a shot at higher highs. Failure to hold that level opens up a return to 5-day VPOT, 42.78 half. Now again, pullbacks into this 43.38, that could be defended, and if so, 43.97 becomes the next upside target with an outside shot at seeing a continuation even further into 44.56. All right, that's it for now. Let's see how this thing plays out heading into Tuesday's trading. Good luck and trade well.